Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Strategic Insights into Trading with Warrant Market Makers. Okay, welcome everybody. My name is Shane Chu. I'm the moderator for this session. Now, one of the myths around structured warrants is that there's no liquidity, right? So we often look at the trader volume as a liquidity, but in essence, they're the assistance of market makers who provide liquidity, the bid and ask in the market, right? So today, we've been addressing a lot of misconceptions and myths surrounding the market makers. For instance, do they trade against us? How do market makers, make profit out of us? Okay, so these are the issues that we're going to address in this session so that we can clear all these misconception and myth for all of us retail investors. Now, before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. She is the warrant specialist at RHB Investment Bank, where she applies her comprehensive knowledge in equity derivative and wealth management. Prior to her current role, she has 6 years of experience in wealth management, which included expertise in structured products and adeptly handling a diverse range of clients' portfolios. She is a dual license holder of the Capital Market Services Representative License from Securities Commission Malaysia and holds a bachelor degree in economics from University of Malaya. She's none other than Miss Vanessa. So Vanessa, how are you today?
Hi Shane. I think I am good. Despite the market is not that good.
Yeah, despite broad market weakness, right? All
Yes.
right. So pleasure to have you here today to discuss the role of warrant market makers in providing liquidity in the warrant market, right? So over to you, Vanessa.
Thank you, Shane. Thank you everyone for having me tonight. So I guess it has been a very long day for all of us today, I guess. Yeah, because it's quite bad, like I would say. One moment. All right. So today, before I start, we'll do some exercise before we start. I will ask a few questions, see whether like all of you, have any idea about who is the market makers and who are the issuers that is currently in the market. All right, so I guess let me launch this first. Okay, so do you choose warrants based on who the issuer is? So for information, that there are actually 7 warrant issuers in the market. All right, so RHB Investment Bank is one of them. So we have in the market Maybank Investment Bank, Macquarie, Tenaga Investment Bank, uh, M Bank, and M Investment Bank, and so forth. All right, so we would like to know whether you choose who the issuer is, like for example, or if it's RHB. So you have some idea of how RHB they have a live price matrix, and that's what you like, and then you like to trade with them. Or if you are a gung ho index warrant investor, then you found that RHB Investment Bank does not provide any live metrics on the index warrant. So you have chose to trade with other issuers, then you can let us know. All right, so it's anonymous. I don't know who you are. I just want to know whether you guys choose accordingly or not. Okay. Yes. So, okay. So you guys done? Let me see. All right, so I think it's about 50-50 right now. Some people they have their own preference, right? Favoritism, I would say. And some they are really an experienced trader, so that they actually choose based on the warrant specifications. So they are indifferent in choosing the in decide in mining, I mean see whether who's the issuer is. They don't care. They just want the best warrant in the market. Yes. All right, cool. So I'll just end it right here. All right, thanks for your responses. So it's really about 50-50. So you guys can see, so it's about 50-50. All right, so we'll actually there's no right or wrong. So it's just I mean your preferences. All right, so let me just stop sharing and then I will start with my slide now. Okay. All right, so today we'll be talking about the strategic insight into trading with warrant market makers. So every time when we share and whenever we do our educational webinars, right, it's mostly about how do we choose warrants, what are warrants and all. So today we'll be doing this in a different perspective, which is with the market makers. I believe a lot of you have a lot of questions in your mind whether who the market makers are and what do they do. Do they really actually trade against the investor that's in the market? So today we're going to talk about it. All right, so yep. So the first of all, we'll be talking about what's the role of market makers. What are our functions? So secondly, we will talk about the misconceptions. Why I say that it's misconceptions, which means it's not entirely true. So whether market makers trade against investors and how do we actually maintain the market liquidity? All right. Third, we'll be sharing how do we hold on the warrants and when to sell the warrants. All right. So I'll be sharing on a few point of view. All right. So let's get through this very quickly because I think many of you who actually trade in the webinar today, you guys are really experienced. All right. So these are the differences of structured warrant and also company warrant. Though a lot of people, they are actually an experienced investor. I also sometimes receive some calls and inquiries that whether they can actually choose to convert the shares upon expiry of a structured warrant. All right, so normally the answer is no. Okay, reason being, structured warrant and company warrant, they are different. They are different. So that for structured warrants like call warrant and put warrant, they are generally settled in cash. All right. So while company warrants, you can actually choose to exercise it in shares. All right. So when we see the first one, they are issued by financial institutions for call warrants and put warrants, while for company warrants is for company. And then market maker, yes, because we are the issuer of all these warrants, so that there will be a market maker for all these warrants issued by respective investment banks or securities firm. While for company warrant, there will be no market maker. So it's by the supply and demand forces in the market. All right. So these are actually some of the main differences. All right. So structured warrants are not like shares. They have the underlying, we usually actually, for structured warrants, there will be underlying assets and most likely they are shares, a basket of shares, indices, ETF as well. All right, but why they are not like shares? Because we have a very specific warrants lingo. We have our name. You see that there's -CM, so which is a call warrant over 99 Smart, and we have the issuer. So in this case, the issuer the investment bank, and we have so many other things like effective gearing, sensitivity, and all. So I believe all of you know that there's so many things like project. So you have everything, you have your jumbo and all. So the fixed parameters upon issuing a warrant that we have fixed, they are the exercise price, exercise ratio, and expiry date. All right. So now we started our first thing, our first key learning, point, which is what does a warrant market maker do? So as an issuer, we will actually set all these exercise prices, exercise ratios, and expiry dates on that warrant. All right. While for the dynamic parameters, that is not under our control. I mean, it will be indirectly affected by the fixed parameters. There will be the effective gearing, sensitivity, premium delta, and so forth. All right. So when you choose, these are actually all of the elements that you can choose from to decide which warrants you would like to invest in. Okay, so this is a snapshot, 25th March, all right, when the market was still okay. This is an example of NextG. So it was called Datasonic before. So NextG, there's this NextG mother share, the first one, and then we have C63 and C66 and WB. So WB is a company warrant. They are actually not issued by the investment bank, so they are issued by the company itself. The prices over here, the bid and ask price, they are actually determined by the market forces. All right, while next GC66 is the call warrant over next G. So you will see the price, bid and ask price. So it's actually provided by the market maker. Of course, over here, there will be some last done prices and all. All right, so once you click into it, you see the market queue. For market makers, in general, market makers will provide bid and ask prices at different levels. Like you can see it's half cent, 1 cent, and 1.5 cent, and with usually 200,000 quantities and above at bid and ask. All right, so all this will be determined by the price matrix. All right, so our role is to provide the bid and ask price in following the price matrix that is provided on the RHB Warrant website. All right, so why do we say that it's promoting a price transparency? Because for us as an investor, we'll be seeing the same prices as the traders, who is the market makers as well. So when you're looking at 30 cents bid of NextG shares, both of us, like both sides, will be looking at 3 cents at the bid price and 3.5 cents at the ask price. Yeah, so this is one of a very important thing that we have to know, that the market makers, we don't have any crystal ball or something. We'll be looking at the same screen as you do. All right, so based on the Bursa Securities rule, we are compliant. So we are following all the laws and the guidelines that's regulated by the regulators. So first is that the minimum presence will be 80% of trading hours, which means that the market makers have to be there 80% of the trading hours. So we have to be there to queue for bid and ask price. And also we have to buy and sell the prices that if it's matched with the price matrix, then we have to buy and sell according to that. Secondly, will be the maximum spread of the bid and ask. It has to be a maximum of 10 bids. So it cannot be over 10 bids. You can see actually one bid is normally 0.5 cent, right? So it cannot be more than 10 bids of that. And third will be the minimum quantity of the bid and ask has to be 5,000 units of structured warrants. So if you see there's 0 units of structured warrants that is queued at the bid or ask, then maybe the market maker, they are not presenting on that, that specific securities. However, if you have noticed that there's only ask, but there's only ask, but there's no buy value, right? Very likely that there's the fair bid or the fair value of this warrant is at 0, it's worthless. And that's the reason why the market makers will not be queuing at that price level. All right, so before you call us or before you call Bursa, please check with the market makers first, and also to look at their live price matrix. All right, so this is the bid and ask quote. I think before I come to this slide, I've actually explained some. So this is a Leong Hub International Berhad call warrant, LHI C19. So you can actually tell sometimes when there's no liquidity on the mother share, there's no one trading LHI C19 on that day. You will see there's no traded volume at all. But does it mean that it's not liquid? The answer is no. All right, so because once you click in, you will see the market queue. That's 500,000 at the buy, 500,000 units at the ask. So you can actually queue, or you can actually buy it at all these prices, because the market makers is always there for you. All right, so whenever it's raining or sunny, your pasar malam auntie will be there, all right, to sell you something. Yes. Secondly, how do we actually determine the liquidity in that specific warrant? So as I mentioned just now, LHI, there's no traded volume at all. This is another example on precious metal. All right, so precious metal C1T. This was also during the time was okay lah, a few weeks ago. All right, press P metal C1T. You can see there's no volume traded on that day, but does it mean that it's not liquid? So once you click into it, you will see the market makers are always there to queue for you, buy and sell. Though in this case, 300,000 and 300,000 buy and 300,000 sell. So you say that why so little? Normally it's like 500,000 or 1 million, right? So it actually depends. In this case, if 300,000 is fulfilled, and then we will actually refill it if the mother share is still maintained at the same price level and same bid level for the warrant. Okay, so don't worry if you want to buy 30 million, then we can actually refill it for you. All right, provided that the price level are still maintain the same. Okay. All right, so another role of market maker is to ensure the price efficiency. All right, so the warrant prices are actually have this theoretical value based on a few factors like the underlying stock price, volatility, time decay, and interest rates. So in this case, I would like to share with you something that's not on the slide. So for warrants, it's very similar to options, if any one of you know. Options is there's call options and put options. So if you find I would say the relevance, it will be put warrant and also call warrant, right? So for options pricing, or we call it the warrant pricing, we also use the same model as option pricing. So we call it the Black-Scholes model. If you're curious, you can definitely Google it up. All right, so how do we actually get a fair value for all these warrants? Like for example, the bid price for the warrants, like 3 cents, 3.5 cents. How do we get it? So there's this formula, right? Like during university time when our lecturer will actually give us one formula and then you have to count what is the value for this formula with all these elements. So in all these elements, there will be things like the underlying price, the implied volatility, because volatility is actually not fixed. So we actually use an implied volatility, the time decay, or we can relate it to the expiry date. So that is the time. I would say the time factor and also interest rate as well. All right, with all of that put inside this formula, and then tada, we get all these bid and ask prices. So we call it the fair value. Then that is how the market maker or the issuers actually come up with the warrants with different prices. All right. So you might see sometimes everything is the same. It's like, okay, share price is definitely the same. With very similar exercise price, very similar ratio, and very similar expiry date. You will still notice that, the bid price still different. Why? All right. So because there's so many other elements, it's proprietary, or maybe the exercise ratio, they are different. So that you will notice the differences in the bid prices of different warrants as well. So from our poll just now, right, we asked whether you would choose you would choose your preferred issuers or not, or maybe you just look at the specs. So this will be from the perspective of choosing the specifications. Okay, so with this, hopefully I can actually make you understand more about what do we do. So besides from issuing warrants, we also make sure that the market is efficient by constantly providing the bid and ask prices. So whenever you think that there's no liquidity, we'll be there for you to provide liquidity. Okay? Yes. So if you have any question, put it at the Q&A box. All right. And then we will actually, hopefully today I can actually take more questions, because last time we don't have enough time. All right, so if you have a question, don't wait until the end. Okay, you faster put on the top so that I can answer first. All right, so something interesting is here. Okay, the common misconceptions. So a lot of people, I would say not only you, right? A lot of people, like, they have the same question. Your market maker, very bad one, always make money at the expense of us investor. So investor very kesian lah, very sad and all. But is that true? Is that true? Whether if it's a is that true whether it's a zero sum game, which means that $100, right? If RHB investment bank or the market makers is earning 60%, that means that you are losing 60% and the 40% is with you. So the answer is no, because there's not a zero sum game. It's not that if I win, then you will lose. Or maybe you win, that I will lose. So that is not true. I would say we are actually on the same boat. So since these 2 days, the market has not been really good, then you know that actually for us as market makers, we will be experiencing the same as well. Okay. So what we hope is that better market tomorrow. All right. So the first one, trade against investors. So as I mentioned, do you think that we really earn all your money because like you, I mean, the warrant is expired out the money, or maybe the warrants from 5 cents, it became less than, 3 cents and all. So do you think that I would say, do you think that the market makers are actually making all the money? So the answer is no. All right. So in reality, we don't take directional bets against investors. We have directional bets, which means that the traders or the market makers will have a view on the market, whether they want to long it or they want to short it. So they have some view on the market and on the respective underlying assets. But it does not mean that if you buy, that I definitely will sell. So that is not true. We don't take bets, directional bets against you. Secondly, this is something that is not known in general. We actually hedge our exposures using the underlying stock. So we don't speculate against you. All right. So if the stock, we think that, for example, if the view is that we are positive on gloves counter, like rubber stocks, for example, Harta Lega, definitely we are going to long a position. And it does not mean that because you buy a lot of Harta Lega, so I want to sell it. So that's not true. All right. So how do we actually make money? So since everyone's saying that, in this case, yeah, you all make money lah because we all lose money, right? How do we actually make money as market maker or issuers? The profit comes from the bid-ask spread, okay, and also time decay. So bid-ask spread means that, let me show you. Okay, so this is the price matrix. So it's a price matrix on 99 Speedmart CM, and this is 99 Speedmart Mother Share. This is the spread I'm talking about. This is the spread that I'm talking about. So if currently, that time was 25th March. If the price was 2 ringgit and 4 cents for my 99 Smart Mother Share, the bid price is 7 cents and the ask price is 7.5. So in general, the investors, so for investors, we will actually buy it at 7.5 cents. So if you decided to sell at the same price level, you'll be selling at 7 cents only. So you'll be losing out the half cent, which is 1 bid. And then this is how we actually make money from you. Okay. So we earn from this. And secondly will be the time decay. Okay. So the time decay, let me just show you. Yeah, I think I'll show you on our RHB Warrant website, what is a time decay. Okay, so this is the website, since we are at Hata. So I do C2Q. So time decay is actually the time value of the warrant, and it will actually reduce day by day. So once you buy a warrant and then you decided to put it in your investment portfolio and you want to hold it, since it's a derivative, and then since time, I would say time element is one of the element that decides the warrant bid price and all. So there will be this time value, or we call it time decay, that is going to depreciate day by day. All right. So you click onto this round thing and you click in, you will see this theta. Theta means time decay. So if you are investing in Hata C2R, day by day, the bid price of Hata C2R is going to depreciate by this amount. So it's negative 0.002 cent. Okay. imagine that Hata price never move, Hata mothership price never move. Then suppose the warrant price is going to be the same, right? Maybe for 1 month or 2 months. However, due to theta or maybe or we call it time decay, your warrant price will actually get lesser and lesser. And this is why we know that when you invest in a warrant, either it's a call warrant or it's a put warrant, it's really important to see the time to maturity and also the expiry date. So when you know that it's very close to the expiry date, the time decay is going to be very fast. So when the time decay is fast, then means that your warrant value is going to depreciate faster as well. Okay. All right. So you guys are seeing the same thing, right? Let me see whether I'm sharing the same thing. Okay, never mind. Let's go back to our slides. Okay. This is the price matrix. All right. So warrants direction is going to track the share price movement. So if we are buying the shares, a lot of shares, then the price will go up. So if we are going to sell the shares, then I mean in general in the market, then the share price will go down as well. So we are actually on the same boat looking at the same direction. All right. So the second misconception is that warrant prices should always track the underlying stock. And I put it the same, like market makers can manipulate prices. All right. So this is not true because market makers are unable to manipulate the stock prices. First, we are not, we are definitely regulated by the regulators. And then this is definitely a wrongdoing. So the market makers cannot manipulate the stock prices. While when you see the warrant prices has been, moving up and down, what up and down, why? But sometimes you think, why is the reason my warrant is not moving up instead? But in fact, that the mother share is going up. All right. So there's a lot of factors. So first, let me just share with you on this, the factors that influence the warrant price. Okay. So the factors that influence the warrant price, this is some example. Let me see. Okay. So share price law. So this is the arrow, which means all of these elements goes up. Everything here, are they going the same direction? Means that if share price go up, your warrant price definitely go up. However, in the market, there's not only call warrants, there are also put warrants. Put warrants means that they will go into the opposite direction. If share price goes up, your put warrant price comes down. And this is also applicable in the reality. So as we have seen, today's market has been quite performing quite badly. The prices are, has been gone down. So if you want to look at the top gainers, they are mostly the put warrants. All right, so there are definitely a lot of put warrants in the market right now. If you are looking at index warrants, then there will be the Hang Seng Index put warrants and all. If you're looking at stock warrants, like in the market, there will be stock put warrants as well. All right, so you can definitely use the warrant website to look at what type of warrants you wish to invest in. All right. So secondly will be the exercise price. So if the exercise price is higher, then the call warrant price will be lesser, while the put warrant price will be on the same direction. Okay. So I think the fourth one, volatility, will be very important to all of us. All right. So volatility, regardless whether it's a call warrant or it's a put warrant, if the implied volatility is higher, which means that the view of the traders on this stock, they are thinking, wow, this very volatile, this stock, then the call warrant price will be higher and the put warrant price will be higher as well. So it will be relatively more expensive. All right, so volatility, take note on this. While dividends is actually the view or the future dividends. Sometimes most of the time when shares, they actually declare dividends regularly. So we do price in the dividend into the warrant price as well. Okay, and the interest rate. But in Black-Scholes model, we have this assumption that the interest rate is fixed along the tenure of the derivative, along the lifespan of this specific derivative. Right? But then if the interest rate is going up, then your call warrant price will be slightly more expensive, while the put warrant price will be slightly lesser. So whether you want to buy expensive or not expensive, it really depends on your preference. Because when you buy, you want to buy cheap. But when we want to sell it high, right? One of the more expensive ones. So it really depends on you. So how do you actually look at all these shares? What's your view? And it will actually leads you to how do you choose warrants. All right, so now I'm going to ask you a question. Okay, so I have a question for you guys. Okay, so do you know what sold out or low on inventory warrants mean? All right, so in some cases, we will see the market makers will put on announcement, or maybe on the social media, they say, oh, it's already sold out. Or when you go into the website, you saw that this sold out tag, right? So which means that maybe I can also share with you what is that means. So for us as issuers, we'll issue a fixed amount, fixed quantity of warrants. For example, 15 million units warrants or 100 million units warrants. So it depends on the issuer. So I have all these stocks only. So I'm selling it on the market. So investor A, B, C, D, E, yeah, they like this warrant so much, so they buy it, buy, and they never sell it back to us. They never sell it in the market. They never sell it back to us. Means that they are all holding different quantity of warrants. So maybe we sell wise. It's really a good business, so that we left with less than 10% of warrants on hand. And then we will mark this as sold out warrants, or we call it low on inventory, because in this case, we don't have enough warrants to sell to you. Hence, the market makers will widen the bid and ask spread. So when you see all these warrants with a very big spread, right? Like ask price is at 2 cents, while the bid price is at 5 cents. So this is definitely a widened spread. Or maybe you will see suppose 3 cents will be 3.5, right? But then it's 3 cents and 5 cents. So when you see a very wide spread, this could be indicating the warrants is currently sold out or low inventory, or other I would say other factors as well lah. So you'll see very out the money warrants very deeply, or maybe we will say deep in the money warrants, which is not very, very good for trading anymore. And then you will see the spread is widened by market maker. And this is how we actually let our investors know that this is not a very worthy warrants to buy. So you can actually buy some other warrants with a tighter spread, so that you don't lose out on the BNRs. All right, so we see that everyone is all right. So yeah, so hopefully during my explanation, how 60% of you has understand what does sold out or low on inventory warrants mean. All right, so for those you know what are those means, then good for you. Okay, so stop trading warrants with very, very widespread. See why do the market maker widen the spread. So by knowing that, you don't actually look at very high volume, then you go and buy, or realize after you bought that, right, you invest in it, and then realize that the spread is so big and so wide, you cannot sell back. So during that time, you are only forced to hold on to all these warrants, and then in that case, you will be hit by the time decay as well. Okay. All right. So this is the second poll. And let's move on. Okay, it's already 9:11. All right. So in this case, it's really important for us to monitor and adjust our position, especially during all these market, very volatile market, right? So we know when to take profit and when to cut loss. That's really important. So how go back to our title where how do you actually trade and think like a market maker? All right. So first, as investor, we need to make market maker your friend but not an enemy. All right. So three things. Oh, just now I talked about the hints. All right. Never mind. So first, use the tool of price matrix. And secondly, notice the hints that provided by the market maker. And last but not least, you have to know that not all active warrants are liquid. I think I already really talked about it just now. Got too much to share. Sorry. All right. This is the live price matrix. So it's super, super important. Every time, all my educational webinar, right, I will talk about live price matrix. Why is it important? So it actually indicates the change of warrant price in accordance to the change of mother share price. Okay, so which means that you can see how your warrant is going to move when the mother share move. So mother share, you go on. Usually you will have, maybe you will draw your trend line, you will draw your technical analysis, your support and resistance line, and you will see what is the bid and ask, what is the share price that you would like to take profit or maybe cut loss. With that, if you're investing into a warrant, a call warrant or a put warrant, you can actually use this live price matrix to see what is the warrant price. For example, this NextG, Marsing, NetGate. Okay, this is all the example. So you can actually identify what is the price of all these warrants. Oh, there's one thing that you need to know. So for price matrix, it's not fixed. It actually change from time to time because we know that the mother share will move. Mother share will move up and down, up and down. They will not be fixed. And also every day, due to time decay as well, the price metrics will also change because your warrant price is going to change. Okay, so it's really important for you to know where to look for this price matrix. So for RHB Investment Bank, it's definitely on RHB Warrant website. Let's see. RHB Warrant website, I think I just showed you, right? Yeah. So, sorry, what I clicked. So this is RHB Warrant website. Just go search on Google and then you can go to this toolbox to look for warrants at warrant search. You can go to warrant matrix. And then when you're at warrant matrix, you can see, you can choose like for example, I put Hata, DNEX, and then I can actually compare. Like for example, Hata C2R, Hata C2Q, which should I choose? Then you can just compare side by side. In this case, maybe you would like to choose Hata C2R because it's more sensitive. You see the warrant price move faster than this one. So this one I have to wait very long for this 1.5 cents become 2 cents. But for this one, even though it's slightly, the price is slightly higher at 7.5 cents, you need very like a fewer patience like less patience for it to go to 8 cents or 8.5 cents. All right, so it's really useful for RHB. I would say for all these price metrics. But RHB website can only display the price matrix for RHB issued warrants. So if you have chosen other issuers warrants, right, you can definitely go to their website to look for the price matrix. So once you trade, you can know, so you will know what are you trading and what is the price and what are specifications as well. Okay, so it will be easier for all of us. All right. Yeah. Let me see. Where was I? Okay, so this is the price matrix. So how do we actually choose? You can place a price limit using your fundamental or technical analysis. You can see But I would say this is good for the day only lah. So if you think that you can enter at 30 cents and then you can price a buy limit at 3.5, and then you want to take profit at 32 cents for next G, you can actually price take profit at 4 cents. But in the case you are already investing in a warrant, you know that is you have an expectation, or your, I would say, you analyze that you have a view that is coming down. So from 32 cents, you think that you want to cut loss at 29 cents of next G mother share, then you have to place a cut loss level or stop loss level at 2.5 cents. So this is to protect yourself from being hurt by a further drop in the warrant price. Okay, so as all of us here, we actually know what warrants is about and all. We know that warrants is a relatively higher risk securities, so it provides a very high effective gearing, very sensitive and all. So when it's highly geared, means that when you go up, you will get very good return because it's going to be multiplied. But in the case it comes down, your losses will be magnified as well. So maybe share price drop 5%, your warrant could drop for up to 30% or 40%. All right, so it's really important for you to place a price limit, entry or exit. Okay. And secondly, is to notice the hints by market maker. So this is what I was talking about it just now because I was too kanchiong to share with you. So sometimes you will see this very widespread, half a cent and 2 cents. Wow, will you buy? Even though you really love Inari, right? You will not buy because you're going to buy at 2 cents and you can only sell back at half a cent. All right, so a widened spread doesn't mean there's no market making. In this case, Inari, why is it so wide? It's not low on inventory, it's not sold out. It's actually a hint from market maker, means that it's so deep out the money. Because when I do this, when I was doing this Inari, right, I think the price was less than 2 ringgit. So when it's very, very deep out the money, it's actually worthless. And maybe when it's very close to the expiry date, you will actually see that the bid is very, very little. And we call it the fair bid, means that there's no value, or the value is only valued at half a cent. So you don't buy. And that's how the market maker tell you, because I cannot call you, right? I cannot do announcement every time. So it's actually reflected in the prices of BNRs. Okay, and secondly, will be the low inventory. Just now I asked you, right? What do you mean? Do you know what is low inventory warrants or sold out warrants? So for this MyEG C7G, it was low inventory, means that a lot of investors actually bought this warrant and then they never sell it back to us. When there's no warrant on my hand, I cannot market make as well. In this case, we will actually widen the spread so that you don't buy. If you buy, then maybe you have to sell it back according to the market. It's not that you cannot sell, it means that the prices will be determined by the market demand and supply. So maybe that person, they want to sell at 2 cents or 2.5 cents, then you are forced to sell there. Oh, sorry, it will be lesser. Maybe he wants to sell at, they want to buy back at half a cent or maybe 1 cent, then you have to sell it less than the yeah. In the case, sorry, let me think. What am I talking? Oh, sorry, we will buy back at fair bid. Yes, but you will buy it at more expensive level. So you don't buy. I would say for low inventory and sold out warrants, it's better not to purchase it. But if you are already an investor, you can sell it back to the market maker at all these bid prices. Okay, so because we will buy back to you. So sometimes when you bought this, for example, MyEG C7G, you bought it and you hold for maybe 1 week only, and then there's announcement that, oh, it's low inventory now. Then you don't kanchong. You have to be very scared of it, because for market makers, and that's what we do, we actually buy it back from you at the fair bid price. Okay, but if you want to sell it more expensive, also can, if there's someone in the market willing to take from you. But you don't have to worry that you cannot come out because we will be there for you at the fair bid. And also some other hints is like when it's near to expiry, the spread will be widened as well so that you can avoid investing into the expiring warrants. Okay, I think this is a few of the last ones. So high traded volume of warrants does not mean very good liquidity because good liquidity will be determined by very tight bid-ask spread, the market depth that is provided by the Warrant Market Makers, and also high quantity on each of the bid and ask quotes. So how do you see that? This is actually one of the example on Netgate. So in this case, is for example, Netgate CF was one of the highest traded, or not traded, with highest ask volume and very low bid volume, and it's not traded at all. Okay, that day. So when you see what a lot of people wants to buy, is it really the best warrant? So once you click in using your trading platform, you will see there's no queue. All right, there's no people queuing for this Netgate CF. So then you know that the liquidity is not that good. All right, so this is actually an example when I got it after market close. All right, so you will see there's no buy and ask prices. But once you click in Netgate CF, when you click in to the price matrix, you will see the market makers. Are they queuing? I think you are looking at the same thing, right? So it's super out the money already, or it's already it's already expired. Sorry. Yeah. So this is 1 ringgit and 80 cents exercise price of Netgate CK. So you will see it's super not sensitive because it's like half a cent for all this long thing. And then you're going to buy at 2 cents and going to sell at 5 cents. So it's not the best. When you see good traded volume because people be selling off. So that is not really good. Okay. And then let me share with you. Wait, this is so weird. Okay. All right, so use the RHB website as your warrants tool to look for the warrants that you want to invest in, because you can definitely choose what's the expiry date, the sensitivity, effective gearing, and can compare apple to apple across different issuers as well. Okay, so this is an example. Okay, finally, this is updated today. All right, Netgate CM, because Netgate CF that time was expired already. So Netgate CM, whether you agree with the market or not. So if you think that Netgate CM is a good, you think that Netgate is actually a good shares to collect at weakness. So how do you buy it? How do you actually invest in it? You think that it's going to go up tomorrow or maybe 2 days later. I mean, your view depends on your view. So you will first look at the exercise price. So Netgate CM has an exercise price that's quite close to today's today closed at 1 ringgit and 2 cents. So the price for bid is at 5 cents and ask is 5.5 cents. So if you have a view that it's going up tomorrow, we don't use bullish anymore because it's very short term nowadays. 5.5 cents. And then you want to exit, you want to just earn for 1 bit and then you want to exit at 6 cents, you can definitely queue at 6 cents, because that is when your view that Netgate can go up to 1 ringgit and 6 cents. All right. But if you have a will or you already have Netgate CK in your portfolio, you expect it to go down more and more. So do remember to place your stop loss at whichever price using the price matrix. Okay. So with this, I will summarize all of this. I think basically I would say there's no stock recommendation and all from educational webinars. All these warrants, before we invest, we have to understand that how it works. All right. So how it works and what is the importance of market makers. And also you just learn how we influence your trading strategy. So since you learn what is low inventory warrants and how do we actually widen the spread, and sometimes when we don't queue, why we never queue, or it's out the money and it's worthless. So that's why you don't see anyone buying back your warrants. And third is that you need to protect your investments through position monitoring. It's not that you buy the warrant and then you put it there, and then one day it expired, out the money, and then you will find it disappeared from your portfolio. So it's really important for you to understand all the products before you make an investment decision. All right. So if you have any question, you put in the Q&A box, because um, I am ready to take some questions. Yeah, thank you.
All right, thanks Vanessa for doing this segment for us. So I guess right now we are more familiar with the role of market makers in the market. How do they provide the liquidity, and how do they make money? And thanks Vanessa for addressing all the myth and misconception that retail investors have around structured warrants market makers. So if any question to ask Vanessa, please write your question in the Q&A box. All right. So the first question I see on my screen is from Benji. So what are the circumstances that market makers cease market making?
Hi, Benji. Thanks for the question. So I think I have it in my slides. You mean this market making is that we don't market make at all, right?
Yeah,
So
stop
when
marketing. Under
for
what
sure.
circumstances will you stop market making it?
Okay, so first is when the underlying asset has been suspended, all right? So that's when we actually stop market making, because we have the underlying asset is not moving. So when it's suspended. Secondly, there's technical difficulties as well. All right. But all in all, in general, we don't actually cease market making because that's our job, right?
Mm,
You actually see whether the market maker is keen to sell or not through the markets, the BNR spread. Yeah.
Vanessa, your video seems like it's going off.
Oh, okay. Sorry. Let me just restart.
Yeah, we see a back screen. Yes,
Okay.
yeah,
Sorry.
you're back. Okay, so the next question is by Wei Chuan. Will RHBIB issue put warrants since there are very little put warrants in the market? If no, why? Since the market is bad, right? As you said, so put warrant would be a tool for us to hedge against our portfolio risk, right?
You are right, Wei Chen. Yes, Wei Chen is correct, because currently during market downturn, put warrants will be relatively more attractive. All right, so definitely we have them in our pipeline. Last time we do have put warrants over YTL Power, MyEG, and so forth. So upcoming we'll be having some on our list as well. So why do we don't have it? Why we don't have it, right? I would say that for all warrant issuance, regardless whether it's call warrants or put warrants, it definitely requires some time. All right, so hopefully we will have some put warrants that's on the market for you to trade very soon.
All right. So the next question is, do you have live metric for HSI structured warrants?
Okay, so Benji, we don't have any live metrics for HSI structured warrants. All right, so as I mentioned, the matrix for all structured warrants will be available on the issuer's website. So since RHB Investment Bank, we don't actually issue Hang Seng index warrants, so we don't have the live price matrix. In the case that you have some interest in HSI warrants or maybe Nasdaq warrants, example, if you are looking at Macquarie warrants, then you can definitely go to Macquarie website, because they do provide the live price matrix. Yeah. So you have to go to different websites.
So depending on which issuer you buy it from, lah, okay, you just
Yes,
go to check with that issuer.
true.
So the follow-up question by Benji is that, may I know how many percent up or down that you cease market making?
Oh, all right. So I think Benji was talking about the limit up or limit down for warrants. So for that will be depends on the asset price. So if the asset price is 1 ringgit and below, there'll be 30 cents up or down, limit up or limit down. So if it's more than one ringgit, if the warrant is more than 1 ringgit, for example, then that will be 30% up or 30% down. Yeah, so it depends on the securities. It's like stocks, it's the same thing. But for warrants, it's quite special because we don't actually see the trading for warrant, whether it's gap up or gap down on the same day. So like if morning gap up, then afternoon actually will resume with the latest reference price. Then maybe afternoon gap down. Yeah, then it's a very different story. But for shares, usually they will stop for 1 day. So warrants is stop for the session.
All right. The next question is by Nitartini. Is the calculation method for bid and ask price the same across all market makers, or every market maker have their own formula?
For in general, we are all the all the issuers, we are using the Black-Scholes model for like we call it the options pricing model. Yeah, but then the price will be different. As I mentioned, the elements in it is different as well. So like implied volatility, different exercise price, and all, it will actually change. It will actually differentiate the bid prices among the warrants. Yeah. So for you to understand more how do we actually price the warrants and all, you can definitely look at the base prospectus that we have. We have it on our website, so we can have a look on it to understand more about warrants, like how we price it and what are the in and outs about structured warrants.
All right. So the next question is by Lim. So if the stock price goes up drastically, right, will the implied volatility increase or decrease? So if the underlying price goes up, will the IV increase or decrease?
In the case of stock prices move drastically upwards or downward, right, the implied vol by right will go up because the volatility increased. All
No,
right, but
the question is
however,
go up, not go
go
down.
up
Yeah.
but the movement is big, right? Go up,
Mm.
then it will go up lah.
So if the price goes up, also the IV will increase lah.
Yeah. So in the case that
It's not
the
just to go
share
down lah.
price move up and down, up and down, up and down, then
Mm.
by right the volatility will increase. But whether or not the market maker would decide whether the implied vol will be up or down, because the market maker can decide.
Mm.
Mm.
Let's say it's like 45-degree up leh.
Then maybe for the
There's no down, there's only up.
then we'll maintain.
Also,
This is not a textbook answer. It depends on the view on of the market makers as well. All right. So
mm,
implied volatility, it doesn't mean that the price up or down, is that the view of the traders, whether this specific asset or securities is very volatile right now. So implied vol is that we expect it to go up or down. So even though there will be spikes in, I mean, these few days, if the view of the traders, they think that, oh, it's still within our expectation, or is the movement is still within our expectation, or still within average historical volatility, then the implied vol will not be changed. But when it's drastically for some time and then they have a different view, then the implied volatility will be adjusted. Yeah. So it
so
really depends on the trader, on the market maker lah.
how frequent do you review your IV assumption?
We I would say that we try not to adjust it very often, because as we all understand, okay, so today share a bit more. So as we know that implied volatility is one of the very important element that will decide what's the price of your warrants, the bid price of your warrants. So if you're exiting warrant, or you bought the warrant like 10 days ago, and then now while the warrant market maker decided to increase the implied vol, then in that case, your warrant bid price would be slightly more expensive. Or the warrant price will be slightly more expensive. Then you will untung from there lah, because the price is slightly higher. But in the case for new investor who's buying into it, right, it's relatively more expensive already. All right, so that is how the implied vol going to affect the warrant price. All right, so in this case, we try not to, if it's within the view of the traders, then the implied volatility will not be changed. Yeah. So it's not very frequent one. It's not like every day will change, you know. Yeah.
So let's say in the current bearish market right now, where there's a retaliative tariff
Yes,
everywhere,
yes.
right? Coming from
Mm.
Europe, coming from China. So let's say the stock price has come down, right? So I have a call warrant, and when the stock price comes down, the IV will go up, right? Because now we are in a
It's
heightened
very
volatility
volatile.
period,
Yeah, it's very
right? So
volatile.
IV will go up, right? So IV go up means my call warrant price should go up because there's increased volatility. But call warrant also, but the stock price move against the call warrant direction, right? So will there be a possibility that my call warrant end up breaking even, or have a slight profit
Like Wuntong,
because of
right?
slight profit because of or the
Yeah.
increased IV?
It's possible because of the percentage. It's possible, but it will not change. I would say that the volatility will not change that drastically as well, because we do not want our existing or maybe our potential investors to lose out or maybe make a lot of money from there. I mean, we want everyone to make money lah, but you know, to take advantage on that. So it depends on the percentage as well. Yeah. But in the case of if the stock price drop, right, usually it will be more than the implied volatility lah.
Okay, so more likely is we'll lose money like because
Yeah, it will
the market
actually
go
the
against the
main
call
direct
direction.
yeah, the main I would say the main element or main factor that affects the warrant price would still be the underlying asset price. But if
Okay.
you notice recently, right, since I mean these few days due to the I mean the we call it the trade war, so there will be very high volatility in, especially I would say Hang Seng Index or maybe the Nasdaq or Dow Jones Index, right? So we have in the market definitely there will be call warrants over all these indices. So we have to trade really carefully with that, and that is the reason why you have to use live price matrix. It's going
Mm,
to give you more transparency whether you are going to buy it more expensive or more or maybe even cheaper. And then also you can actually notice the time decay as well, whether you want to hold it 1 day or 2 days. And then so it's really important for you to use the price matrix. Yeah.
mm,
So
all right.
instead of you go and check the implied vol whether it's going up or going down. So I would say that price matrix is actually the most straightforward tool ever. Yeah.
Mm, all right. So just now you mentioned that when the warrant is deeply out of the money, the spread will be widened, right? So the question by Sue is that how about when it is deeply in the money, will the spread be widened too?
When it's very in the money, the spread will be widened too. Yes, there will be cases like that because it's not, I would say it's not a textbook answer. So it depends on the market maker want to tell you, oh, this is super out of the money, don't buy, because if you buy it, it might expire worthless. In the money, I would say sometimes we actually widen the spread, but most likely we don't now. Because when it's in the money, right, you will not, compared to out the money warrants, during expiry, you will not lose everything. You get what I
Mm,
mean? So
mm,
means that if out the warrants, out the money warrants, if it expires, so it's going to be worthless and you will not get back any cash. But for in the money, you will still get back some cash lah. So yeah, but in the money warrant is really important for you to know. When it's in the money, it will be super sensitive, so super responsive. You will see the warrant move very fast up and down. Yeah, so when it goes up, you'll be very happy, but when it comes down, it will actually come down very fast also. So it's really
okay.
important for us to be very careful lah on that.
So you're saying that the reason you widen the spread for out of the money warrant, deeply out of the money warrant, is to warn investors that this is expensive because it is out of money already. You might expire worthless. So try not to buy this, lah, correct?
Uh, it's right in general, but it's not more expensive. I would say because it's okay lah. It's expensive to buy because the spread is very high, ma. It's at 2 cents
Yeah.
sometimes. Yeah, it's expensive. It's not worth buying lah. Anyways, yes, not worth buying. Yeah.
Mm. All right. So the next question by Nagulan Ramamudi is, may I know how to check the expiry date of the company or structured warrants that are issued?
Okay, Nagulan, so you can definitely, I'm not sure if your trading platform will show you what is the expiry date, because I would say some trading platforms they show you, but you can definitely use the Warrant website to see. So let me share with you again my website. So I'm here to promote my website, right? Okay. So this RHB Warrant website, you go to this Warrant search and then you see lah whether maybe you are not buying your shares. Um, for example, you have some instant on hand. Okay, let me see. Instant holdings. It's not from IHB, but instead it's actually from mbank. So you just choose mbank and then you whatever lah, you just choose a few lah, and then you see lah, the expiry date that is available here: 30th April, 29 August, 27 November. Yeah, so you have to use all these warrant websites. So besides from IHB, Macquarie, Maybank, they do have Penanga, they do have the website also, so you can compare all the warrants that you have, or maybe the warrants that you have interest in. Yeah. Okay, I think I answered the question.
Yep. So so the next question by Muthu Virapan is that, will uh, in the current bearish market, is it better to trade put warrants?
Yes, Mutu. So I would say that put warrants will be more relevant in bearish market. All right. So, but it still requires you to monitor closely on the price. I would say for now, put warrants more than call warrants lah. I would say benefits you more than call warrants. Yeah. So if you have a negative view on Hang Seng in that Hang Seng tomorrow, example, you can actually go for Hang Seng put warrants. Yeah. That
Mm,
is one of the example.
okay. The next question is by Fatin. What's the difference between MyEG and MyEG C7G? She's new to the trading warrant.
Okay, okay, no problem, Fatin. So Fatin, as I mentioned, for structured warrants is actually a derivative product. It's a securities that derive the value from an asset. So this asset in this case, MyEG is the share, so share is asset. So if you're going to trade in MyEG, right? So that is when you buy the shares directly. Instead, MyEG, there's so many variants. So I can show you some of the warrants since I'm on the website. So these are all MyEG warrants that issued by different issuers. So you have mentioned on C7G, right? So this is actually one of the MyEG warrants, which means MyEG this is a call warrant now because C, right? So this MyEG warrant is going to track the prices of MyEG at the same direction with different exercise with the exercise prices, ratio, and all. So if you want to look at it, right, I don't think it's a very good buy for C7G. If you are still interested in MyEG, you can look at this one, C8M, where uh, CAM is the call warrant, and then this is actually the price matrix. So if you expect that MyEG tomorrow, or you want to buy at 75 and a half, you can actually queue at 4.5 cents. And then if you want to sell it at when MyEG mother share is at 80 cents, then you can queue here, but you will make money because the spread, right? So maybe you want to queue somewhere like 5 cents. So once it hit 5 cents, it will automatically sell. Yeah. So the differences between MyEG and MyEG CAM is that CAM will give you a gearing effect of 3.2 times, and that is going to help you make more money if it goes out. But in the case that MyEG drops, right, then you will actually lose 3 times more than buying in the mother share. Yeah.
All right. So the next question by Jia Cheng is that, so the price matrix shows the buy and sell price that the market maker are willing to accept at different underlying price. Is that what you mean?
Yes. Okay, let me see. I'm not sure if you are looking at. That's true, that's true. So I think this is what I did this morning. Sorry, this afternoon. Okay. Never mind. I'll just use the website. It'll be easier for you. I guess looking at my website. No.
We're looking at your example.
This one? This one?
Yes,
Is it the
we're looking
website?
at website. Yeah, that's right.
Yes, so she charging is correct. So which means that if the price is at 76 cents, right, I can definitely sell it to you at 4.5 cents. All right. So if you have the warrants already in your hand at 76 cents, I would definitely buy it from you at 3.5 cents. So this is the prices that market makers is willing to buy and sell.
All
Yeah.
right. So the next question is by Lim. So Vanessa, just now you show a theta decay of 0.0002, right?
Yes.
So the question here is, does theta decay happen continuously or end of the day, like end of the day you only deduct like 0.002 cent, or it happens like every hourly basis or something like this?
It's actually by end of the day.
So only end of the day you adjust the warrant price lah, according to
You will
the
see the
theta.
warrant price to go down a bit lor. Like this is the example for MyEG C8M, right? The theta is like negative 0.01 only,
Mm.
0.0001 cent. Okay. So in this case, it's going to be calculated end of the day. So maybe tomorrow you won't see any difference, but 5 days later, finally you saw some movement in the bid price lah. But
So if
provided that your mother share never move.
so if an intraday trader buy and sell within the day, so they won't have to pay the theta lah, correct?
Yeah, they don't have to worry about it. So for example, I would say that like index warrants, maybe the theta will be slightly higher, or maybe some of the I would say very close to expiry date, right? All these warrants very close to expiry date, you will see the theta is very high. So usually you don't hold that long, but in the case that you have to hold for that long, then you have to look at the theta also. Yeah.
Mm. So I believe if we hold the warrant over the weekend, we also have to pay the theta over the weekend, right?
Yes, that's right. But if you don't mind us earning the theta, then it's okay lah. But it's not that definitely will depreciate because it depends like you need how many days to go down by one tick. Then maybe the underlying asset went up already, then you won't actually lose out on the theta. Like I think if you go to this warrant search and more filter, if you go to theta, right, then you will see this I sort according to the expiry date. Then you see this theta is super high. Like Escomnet is like 5, then this 11 is very high. But instead, if you go to the newer warrants, right, so it's like 1, 2, so it's relatively lesser lah.
Mm.
Yeah.
All right.
Mm,
Um, so the next question by Pua is, so the concept of warrant is very similar to options, right?
yes. Yes,
Mm.
that's right. Because we use the same, I would say it's basically like options are because we call it call warrant and put warrant also, then it's call option and put option. But different from option also, you see options there's no exercise ratio. But for structured warrants, we do have this called exercise ratio, which means that maybe this thing, like these shares, we actually break into different pieces. So when the exercise ratio is higher, which means that you will see um the warrant bid and ask price is relatively lesser also. Yeah. So like QL is like about 4 ringgit plus, right? So we need about 5 exercise ratio of 5, then we can break it down into 7 cents. So it's easier for everyone to trade. It's similar to fractional shares also lah, the concept.
So you want to make it cheaper and more affordable for retail investor, right?
Yes.
S-
Yes, that's right. And it's cheaper and then the gearing is higher also. So that everyone is going to they can actually gain leverage exposure lah, that's what we say. And also it makes it more riskier than trading shares also. So you really need to pay more attention in trading structured warrants.
Have you ever issued a warrant whereby the exercise ratio is one? That means
Yeah, we have.
you have, right?
Yes, we do. So, but one
Is
is
that well
super.
received by the market, or market prefer a very big exercise ratio?
Okay. smaller ratio, okay, so you see the very high ratio would be the US stock warrants. So we have Tesla, Apple, and Airbnb. So we are actually the only issuers issuing the US stock. So the ratio is very high because the tick size is very small, ma. So I think I show you the very, very small ratio. Like this one, all this one ratio is one only. Ecovest C60, JPG, CD. I think the JPG was okay. Yeah, so these are all one. So usually when exercise ratio is one, you will see the sensitivity will be lesser ticks, so means more sensitive. But this one is off already because the moneyness, so it's very off. So when I mean additional info, if the warrant is super out the money, which means that the share price is way lesser than the exercise price, we call it out the money, and then you will see the sensitivity of the warrant will be very not responsive, so it will move very slow. Yeah, but this one the data is a bit off lah because you have to use it during the market hours for the accurate data. Yep.
Mm. So what is the relationship between sensitivity and effective gearing?
Okay, so that's no relate. I would say that yes, it's related. Sensitivity and effective gearing. Okay, sorry, it's not related. So it's different thing. Sensitivity, which means that what is the speed, how responsive it is. Like for example, 99 smart cm. I will just use metrics to show you lah. So sensitivity means the speed, how fast it moves, and then effective gearing means how big the movement is. So we call it how much the changes is. So I compare these two law, CMCS. I got another one is CT. So in this case, when you see sensitivity of 3 ticks, lesser the better lah. Lesser is more responsive. I would say better because you want it to go up and down, and then you can capture the movement, and then you can sell your warrants. But it requires a lot of attention in monitoring it. While for CS and CT, it's 18 ticks and 14 ticks. So you see it's very slow one. Even though 99 Smart has been moving up, you still don't see that your warrant is moving. All right. So in this case, the sensitive one or responsive one would be CM. However, effective gearing is to measure the movement. How big is the movement? Whether you earn more or less. So effective gearing, you look at it 7.7 times. This means that approximately 1% move in 99 speed mother share is going to cost 7.7% move in the warrant price. So 1%, then you earn 7%. This one is 1%, you earn 10.7% approximately. Then effective gearing 6.6 means if speed mark goes up 1%, this one will move by 6.6%. All right. However, still note that there will be sensitivity that's applicable over here. So, which means you have to wait lah. Maybe it's from here to here or here to, the price after the metrics that you can't see. Yeah.
All right.
Mm.
So the next question by Pua is that, so if the concept of options and warrants are almost the same, so why do we not have option trading in Malaysia?
Sure, do you want to answer this?
How I answer?
Okay lah. So actually, yes, you can actually trade options in Malaysia. So you can definitely trade it on Bursa Derivatives Board. So it's if not mistaken, is the OKLI. So it's a KLCI index options. Yeah. And there's also single stock options as well, but that is not on the board of Bursa equities. So you have to go to Bursa Derivatives and trade there.
Mm,
Yes. Mm.
yes. In the securities market, we only have warrant. Okay.
Mm.
So if you want to trade
Shares
options, you
lah.
have to go to derivative market. Okay. So in which you have to open a future trading account. Okay. To trade OKLI lah. All right. Mm, okay. Any more question? So if you have more question, you can write them in the Q&A box, yeah?
Okay, so oh yeah, so before we end, right? Okay, we still got 5 more minutes. So let me just share with you how can I share something, Shane? I'll just share how do we maneuver this website.
Yeah, sure, go ahead.
Okay. All right. So this RHB Warrant website, right? You can, if all of you are interested in knowing more about the RHB warrant and learning about warrants, right? You can definitely go to this warrant website and then go to connect and then you go sign me up. And then you just put in your email address. With that, yeah, I put it in the chat box now so everyone can see. So with that, you can receive our email newsletter. I won't be spamming you. I will send we will actually send in some updates about warrants weekly. We'll send it about 2-3 times lah. So if you want to know more, then you can definitely sign yourself up here. All right. And besides from that, you can definitely follow us on Telegram. If you have not followed us, I don't have it here. Let me see whether I can find it somewhere. Okay, you go to this warrant website and then you go connect and then you see this uh sorry this Telegram channel. But mine is blocked lah. So you click join now. But then mine is blocked, so I cannot show you. But yes, definitely you can follow us. It's called RHB Warrant Malaysia. All right. It's called RHB Warrant Malaysia. And then not to forget, follow RHB Investment Bank as well. So it's called RHB Investment Bank Official. So besides from warrants info, you can definitely get a lot of insights about stocks and also insights about markets and also our events as well. All right. So don't yeah, since we are all on the phone, right? So might as well you subscribe more information then that is going to help you more about your trading journey with us. Okay. All right. So yeah, that's all. Yeah, that's all I want to share. Shane, thank you.
All right, thanks, Vanessa. So I believe all of us here are more familiar with the role of market makers in providing liquidity to the structured warrants market. All right. So thank you so much, Vanessa, who is a warrant specialist from RHB Investment Bank, to share with us the role of market maker in the
Thank you,
structured warrant
Shane.
space. All right.
Thank you. Hope you enjoy.
So for our next webinar, it is going to be a webinar in Mandarin. So the title is 利用技术分析实现有效的风险管理. So it's happening on 14 April, 8:30 from 8:30 to 10 o'clock. So I've just given you the registration link in the chat box. So if you're keen to learn how to use technical analysis to do a effective portfolio management or risk management, please join this session on next Monday to learn more. Okay. This is in the time of period where we will see a lot of volatility. So risk management is even more important in this period. Okay. So you want to learn how to do how to use technical analysis to do effective risk management, join us in this session. So if you want to open a new stock trading account, you may scan the QR code or click the link that I just given you in the chat box. So with that, I want to thank all of you here for staying until the end of this webinar. Hope that you gain insights into this webinar. All right. So bye bye everybody. Hope to see you in the next session.
Thanks. Bye bye.